Okay, this is a little tutorial on why traders lose. It was originally designed for the struggling traders class that we have at ProAct, but because it has such validity that we're making it available to everybody. Don't forget that nobody tells you can make $1 million in 3 weeks here. The possibility exists you could sustain a loss of some of all your initial investment. Therefore, never invest any money you cannot afford to lose. Be aware of all the risk. If you have any doubts, seek the advice of a financial counselor. Alright, so let's talk about a trade. Alright, so trade starts off like this. It looks like a great trade. This is the way most people trade, by the way. Okay, this is the way the herd trades. Okay, so it looks like a good trade. The market starts moving up, but let's wait. We're going to need a little more confirmation. Okay, it's just give me a little more confirmation. I'll wait to see if it goes just a little further, and maybe it'll manifest into a great trade. There it goes. Okay, this is the greatest trade in the history of the Forex. I'm in. Ooh. Oh well, it's going to take off again. I know it's going to take off again. Oh man, I must have this wrong. It's gone too far now. I'll wait until it goes up and then I'll get out. Maybe I'll get out for break even. Oh, I can't stand it anymore. Yikes, I better get out and cut my losses. I'm out of this trade. Phew, I got out with just a few pips, only 28 pips loss. Oh, man, I should have stayed in. What the heck? Oh, it was the greatest trade in the history. I'm in. Oh, and see, that's kind of the way that we trade, okay? And what it does is you are on a emotional roller coaster. Why? Because you bought high and you sold low. Now, in this example, in this tutorial, we're going to use an up move because it's easier for most people to see, but it works the same way going the other way. So we're on this emotional roller coaster. Why? Well, first of all, we weren't sure of our analysis, okay? That's why we bailed on the trade early, okay? We weren't really sure of the trend, so we weren't really sure whether we're going counter trend or we're going with the trend, and we have no idea where the targets are. Therefore, when we make an entry, we may be making an entry right at the place where the market has pulsed to stop, okay? The other thing is we didn't expect a retracement. Now, we've done this multiple times in our Endeavor classes and also in the advanced class, and we've looked at charts and we see that virtually every candle, when you got a chart with 100 plus candles on there, all but one or two retrace. Every single candle retraces. So we didn't expect a retracement, and that's ludicrous since the market overwhelmingly proves to you that the market's going to retrace. We didn't know that they're going to square up. Anytime there's a big move, thrust, upwards or downwards, they're going to try to square that up, which means they're going to come back. And where they come back to is the fibs, okay? Sometimes they do 100% retracement, in which case, or even further, that's what we call a whipsaw. But typically they're going to square that candle up, or those candles up, and come back. By the way, this is not the last trade in the Forex, so you don't have to jump in just because the candles are moving. You have no discipline. Since you don't know the analysis, you don't know the trend, and you don't know where the targets are, and therefore you have no plan, then you have no discipline, because you have to have a plan to exercise discipline to actually execute a plan. And you didn't have a pre-planned exit strategy. Right? And you didn't know what targets are the market trying to hit. And so what you did was you followed the herd. The herd is called the dumb money. They do the same thing every time. They're so predictable that the bankers take advantage of them. They know exactly that the little boys are going to buy high and sell low, so they take advantage of that. All right. So let's do an example here using the same pattern that appears over and over in the Forex, but this time let's buy low and we'll sell high. All right. Now, obviously, it's the reverse in a downtrend. All right. So here's our market takes off. Looks like a great trade. My targets are known. I got plenty of room to both of them. There's an RF 10-10, or maybe there's a 6 aces, or maybe there's a royal flush, or maybe there's a wild card. I'm in. Now, when we take this first position, we don't take it with all our lots. We take it with a small percentage. Let's say that we're trading 3 minis, okay? Then we'll take this first trade with 1 mini, not 3, all right? Market continues up. It breaks support. Because it breaks support, we have a reason to add a position. So we'll add a lot here. Market takes off, hits the first target, okay? So we'll take half of our position off and we'll move the rest to break even. And by the way, that's exactly what the big boys do. When they get the first pulse of the movement, they take half their position off with profit. Now, no matter what happens, once they move to break even, the worst that can happen is they made profit on half their position. And just remember, that could be 2,000 lots, so it's significant for them. All right. Now, we know that the market's going to turn up and it's going to square up. So therefore, we expect this downturn here. That's why we took half the position off in the first place. Now, we're looking for it to head for a 618 retrace, okay, or maybe a 550, or maybe a 382. Hopefully, we get a 618 retrace. At the 618, we enter another buy, okay? Now, this is hard to do because in this area right in here, the candles are screaming down, all right? So that's why you have to have this pre-planned and you make this trade. Now remember, you can't lose on this trade over here. You've already got it at break even and you've already booked half your profit. So because of that, your only risk is on this one other trade, just like it was the very first trade. The market reacts at the 618, which it should, okay? So now we move our stop on both positions. Now we can't lose and we've got a positive position on both sides. All right. We've broken this previous support, which was the former target here. Because we broke the support and we know where the target is up here, we add another position there. Okay. When we hit the target where we're going to go, we take all our positions off and we expect the market to retrace. Totally different. And in this example here, trading opposite of the herd, we made a trade here on the start. We made a trade here when it broke the support. We added a lot. We made a trade when it retraced to the 618. When it broke this support, we made another trade, and up here. So we take 4 winning positions out of what was before a losing position. Okay? So, how does this look like on a real chart? And by the way, this is what you have to learn to do to become a trader. You have to learn to go against the flow. Okay? You have to buy low and sell high. You got to buy low and sell high, not the opposite. Most of us let the market take off like this, and what we do is oh, there it goes, it's going to the sky, I'm in, and we buy high, and we got to quit that. All right? So, can we spot the same moves on this move here? Okay, the market takes off, okay, and it goes up here, right? So where could we have added a position? Well, our first position would have come here when we had this wild card. Remember, we're above the moving averages, outside the desert, arrow and a painted candle. Our first target is there. When we get to the R2, right up here, we'll take our position. We'll take half our position off and move our stop up, okay? Now, we know the market's going to retrace. Why? It can't do that. That's an unsustainable trend right there, okay? So it has to retrace and it's going to square up, okay? We notice this consolidation over here, so we'll look for the fibs and pop the fibs from the top here down to the bottom here, and we'll get some fibs. Market retraces. We get our fibs right here. We get the 618 fib. What are we supposed to do? We're supposed to add a position. So we add a position here, okay? And then the market takes off. Takes a lot longer to do because what happened was we ran out of time and it goes sideways all day, but ultimately it takes out the target up here. And when it broke this support running right along here, we should have added a position on that wild card right there, and up we go and we make the trade. Very simple, okay? Let's see if we can do a downtrend. It's the same move, okay? So here we got a straight down move. We actually had another opportunity to do it before here, okay? We have a straight down move here at the R2, which would have been right in here. We would have taken our position and we would have moved our stop to break even, and we would have taken half our position off, okay? Then we have a retrace back up to here, okay? There's the fibs. In this case, we only got to the 50% retracement, okay? What are we supposed to do there? Add a position, and down we go, all right? Once again, and once you broke this support right along here, that was the time to make another trade, and you'd have had all those trades. That's how you have to do it, folks, and it's contrary to what your brain's telling you to do. But that's what you have to do to learn to add and scale in and have lots of positive winning trades as opposed to losing trades. So hope that helps you, and look forward to hearing of your success.